Hi, this is Rudy Martin for Uncommon Wisdom Daily TV. Sometimes indicators such as earnings, debt-to-equity ratios, and market penetration don't determine how stocks trade, and that's certainly the case in Argentina. You see, Argentina's stock market is discounted because of its political past, but investors who are willing to look into that extra risk could see some big payoffs soon. In the United States, we must endure 55 more weeks of uncertainty before the next presidential election. In Argentina, though, it won't be a surprise when the current president, Cristina Fernández Kirchner, wins her re-election bid based on a booming economy. In a sign of her increasing confidence, Fernández is calling on Latin Americans to promote intertrade among the region's countries. She's targeted a goal of replacing nearly $460 billion of imported goods that were brought into South America last year. By building a more integrated economy, Argentina and the other regional economies could be in an insulated position so that they're not affected by cyclical forces. I've been talking about that second wave of economic growth for some time now. That's where emerging market countries find themselves becoming more financially integrated as they become less dependent on the developed nations. In other words, when the developed nations don't have the demand or the money to pay for your products, then it's time to find another customer and call on your neighbors for help. Despite being a global powerhouse in agricultural exports, Argentina has not prospered from the recent worldwide rise in food prices, and its stock market performance has been equally dismal. In fact, the Argentine Merval Index, off 22.9% year-to-date, is the worst performer of the major Latin American stock markets. According to the Global Competitiveness Report by the World Economic Forum, Argentina has an extraordinary competitive potential, a large domestic market, and a population that has a fairly high level of education, yet its potential remains unfulfilled. The report blames Argentine politics, institutions, labor unions, and basically anyone breathing in Argentina for the missed expectations. Yet some actions by the Argentine government to deal with its budget shortfall and financial needs have not been very popular. Examples include nationalizing pensions and raising farm export taxes. And certainly, better trade dispute resolution with its 5 neighbors and the UK would go a long way towards increasing confidence in the political system of Argentina. But while there are worries regarding the prospects for Argentina's economy and their stock market, it doesn't necessarily mean investors should ignore this large, agriculturally dominant nation. If the president steers the country towards a path of reform, as some expect she will do when she's re-elected, the eventual rebound could be impressive. Manufacturing is the largest single sector in the nation's economy, accounting for 16% of GDP, and it's well integrated into Argentine agriculture. Half the nation's industrial exports are agriculture in nature, but it's not just agriculture-based. Automobile production is also growing in Argentina, boosted by demand from neighboring Brazil, which is its main export market. A post-election boost to the president's popularity could provide her with the necessary support to confront Argentina's problems. That's something that could be politically difficult for any opposition-led government to accomplish. That's my take on it. I've been keeping a close watch on political developments in Argentina as well as other Latin American nations, and I'll let you know of investment opportunities as they are likely to emerge. I'm Rudy Martin from Uncommon Wisdom Daily TV. Thanks for watching.